Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. Today is April 12th, 2019, and this is a quick look at some trades out here in the market that I hear people talking about making 100%, 200%, 2,000%, crazy numbers like that. And I want to see if it's actually really available. Today maybe is not one of those days, definitely. The market is trading to me, in a pretty tight range, so we did get a big move, and this is definitely not this definitely is not exactly the ideal conditions for them to do this trade. I can see that they may have done this trade a few days ago or in other market conditions, and it is definitely is possible. And I'm going to show you that yes, it is possible to do those, but it all comes down, are you experienced? Are you skilled enough to actually place these trades? And are you at the mental, non-greed place to actually get in and out of these trades to make that kind of money? But we're going to take a look at what's actually happening right now and see how it actually works with these options. Again, this is not a trade recommendation. Trading is risky. You can and you will lose money on trading, because these options, they're trading options that are expiring today. They usually talk about doing these trades on Friday, and that's why I'll be giving. So you'll hear me and just listen to what I'm saying, and you'll see, there's a better way of actually trading these things. So let's jump right into it. I'm looking at the charts right now. We're looking at QQ. I'm looking at NQ up here, and on the upper left. On the upper right is the ES. These are the future markets. Then below them is their ETFs. On the lower left is QQQ that I like trading. And then on the lower right is the SPY that I also trade, SPY, SPX sometimes. So those are the charts. And as you can see, the mark on QQQ, the market started out at a high and went to a low and trying to make its way back to that high. The SPY started out, somewhere in again, it went higher, then it went low, and it's back, trying to get back above that high and turning over. This is the live market that we're actually looking at here right now. Now I want to go look at the option chain, because that's where it's all at. That's where the money is at. That's where the trade is actually being done on these expiring options that I admit I do not trade. So that's why I'm kind of looking at it. This is how I train myself and how I look at things. It's like you do it in your simulated account, your paper money. You try to make sure it works before you actually trade it. So let's take a look at this. I put on a trade already earlier today. This trade did get where it was profitable, a few cents. Right now it's actually losing money. I'll just let you take a quick look at that, so you won't be wondering what did I do there. I got in at 31 cents. I had set it to just get out at 51 cents. I didn't think I would make 100% on it based on where I had got in at it, but I thought I could make a little bit of money on it. But on an expiring option, it had to actually get above, where it had opened at this morning in order for it to make money, because of it being an expiring thing. And it is late in the day to actually be doing these type of trades anyway with these type of things in this direction. Okay, so right here is your low, your high. Right off the bat, looking at these things, it looks like this thing was as low as 8 cents. You could have got in at 8 cents and could have got out at 34 cents. I don't know about that. We'll take a closer look at that. And then on the put side, this is QQQ. We're going to look at the SPY also. On the put side, we want to look at low and high. On the low, look like, man, you've been out of the money, an out of the money option this morning at on QQQ at 85 cents, and as that market had dropped down to that, and you can see the market is already at 5 or 6 cents too. It went as high as 30 cents, and you'd have made 6 times your money. Let's see. We're gonna take a closer look at that also. But we definitely what's actually showing here, was showing here, that whoever sold that options for 30 cents, he can definitely buy it back right now for 5 cents and make money. What's showing here again, whoever sold this option for 34 cents can definitely buy it back for 8 cents right now. But now let's take a closer look at what actually happened. Did any of those puts and those calls actually make money, or could you have made money on those options? I'm going to take a look at the options chart. I'm going to show you something here. This right here is the option chart for that one of those weeklies that we was looking at. This is on the put side. We're looking at the put side since the market did make a drop. You know, it popped and it dropped. So I'm looking at the options here right now. This is that weekly, April 12th. Today is the 12th, April 2019, 289 put. So this morning, when that market was making its highs, it didn't make it. Let's see it. I'm looking at the chart myself back over here. It made a high at around 9:45, right, right around here. I wish I can. Can I switch back? Can I? I can put. Let me see if I can put. Let me do it this way. We don't need to look at Twitter. Let's go to 5. Did I? Oh, yes, I probably messed something up. That's what I did there. I'll show you how to do it. Looking at SPY. And let's do just that much. See, when I was saying around 9:45, it was at its high and it dropped. So I'm going to zoom in here a little bit. And try zooming in a little bit. I'm on a minute chart here. I'm on a minute chart there. And we're looking at the option chain here. 9:45. This option was almost. This is the put now. This is the put. I'm gonna scoot out a little bit more. 9:30 something. 9:40. You can see this put was actually at a higher price. I'm looking at this. 9:45. The market was at its high. We're looking at an 89 that have been out of the money down here. 9:45. This is a put. This is a put. 9:45 right here. This option was at 10 cents. I got the most 10 cents. You'd have bought that thing for 10 cents thinking, okay, this is a great trade coming up. And I'm looking for this thing to go and make me some real money and all. But if we look at this chart, 9:45, this thing didn't, this put option at 10 cents, you could have got it at 10 cents. And then when it went to its low, let's zoom in here. And that's what you'd expect it. You got the 25 cents. And here at its high at 11 something, it went to almost 30 cents, say 27 cents. And also you could have got in at around 10 cents. And you would have got out around 30. Let's say we can give it the top. You're not going to get the top. We'll say, but it's at 30 cents just to use round numbers. So you would have made 3 times your money, 300%. And that's the best. You know, after that, it was going down. So you could have brought it low. You have to put 10 cents at that time. You could have brought it low and you could have got out high, but only 300%. Only 300%. That's still a great trade, you know, on the put side. But after that, as you can see, let me maximize this chart, number one, since we are just looking at that now. And let me scoot back, and we probably can get it, yeah. Yeah, see, but around 27 cents, yeah, you could have got it around 10 cents and went to 25 cents on there. Easy, 250% on your trade. So those trades are there. You wouldn't have got in at, yeah, you could have got in at 10 cents too. Because it went below 10 cents. It actually went down to as low as maybe 9 cents, 8 cents, as we can see up there and all. So, yes, that definitely was a trade there and all. So 250%, maybe 300%. Yes, it was there. It was there. And it was there for a long time. Look at this. You know, it hung out down there from around that 9:45 to around 10:15 for 30 minutes before it actually took off to the downside. So, yeah. The money was there on that particular trade. Great. So now let's take a look at the call side. This is on the SPX, and now on the. Let's see if we can see the same thing on QQQ. QQQ would have been 180. You'd have been buying 185, and it would have been. Let me change this up. 1, 2, 3, Q, 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 and you'd have been doing a 185. 1, 2, 3, a 185, 185. Put. So on QQQ, the same trade, the trade that I would have been looking at, you know, to make money on the downside, you could have got in as low as maybe 11 cents. You know, first thing this morning, I'm looking to get in early, you know, after that 5-minute play, you know, I could have got in as low as 11 cents. 10, 11, I say 11 cents. I said I wouldn't have got the bottom, but if I had it set for 11 cents, I could have got in 12 cents for sure. And it went as high as 30 cents. Again, you doubled your money and all. So 11, you almost 3 times your money. Again, at 250%. It was definitely there and all, but you had to get out at that high. That's the thing that you got to see here. This is the option chain, the option pricing and all. So that would have been your point to get out of those trades. That would have been a great trade. Now the trade on the call side, let's take a quick look at that and see if it was anything there. We'll take a look at the QQQ. I'm just looking at charts, you know, but I hope you're picking something up here. Let's look at the call. All I do is change that to a C. The call. And this call is, again, would have been a cheap call and all, but it's probably good that they wanted to get them a little cheaper than this one, so you would have been a little bit further out of the money. Let's try a little further out of the money one and see what happened. That's the 85. Let's go to 86 and see how that one worked. See, the thing is that 86, like whoever, if you would have sold that thing up here, but then you would have brought it back. But even now, you know, the market is hitting its lows, hit its lower a little bit after 11 o'clock. It was down here in this area here and all. You know, you've been trying to nail that low for 9 cents, 10 cents. And even though the market did go up, you know, it never really broke 15 cents and it's steady going lower. So whoever sold these options up here for 30-some cents, and now it's almost down at a nickel, definitely made 25 cents. Just want to show you that. Now let's look on the put side. So buying this thing at any time, this weekly one, you went from 20 cents to 30 cents. If you'd have caught a little pop there, you caught a little pop here, you might have made a little something, you know, from, again, 20 cents to maybe 27 cents, 7 cents. That gets back to my nickel thing, but I don't even trade these for a nickel. You know, these are expiring options. And as you can see, expiring options are decaying assets, and you can see that decay right there, especially on one that's expiring today. So now let's take a look at the call side on the SPY. And the SPY be 280, 290 something probably. 290, I should say 298. And we want to do SPY, home, SPY. Nothing is being traded there. As you can see, no volume, so I must be at the wrong price. SPY is trading at 289. I got 290 something, so we need to go to 88. 20 is at 2,800. And we definitely want to go less than price than that. 289. Up to 89.50. Yeah, we'll go with that. Let's see what that looks like. Whoa. Again, whoever sold that option at those highs, this is the call side. You know, this morning when that market was making that pop, and if you'd have decided to go ahead and try to buy that thing based on whatever information you had, you would have made a little bit of money. It moved nicely. And then, so there was money to be made there, but no 100%, 200%. I need to find a better option. You know, see which one would have been a better play trade on the SPY. We want to look at 289. Yeah, 289. 289. Wow. Let's go on the. That's on the put side. On the call side, I want to look at the call side. On the call side, low and high. This one right here. Let's take a look at this one. No, let's take a look at this one. That one looked like it moved quite a bit. 13 to 72, but that's what I want to take a look at, and that's 290. Let's go look at a 290. So let's change this to 290. Okay. If you'd have bought that option, when the market was going sideways, you was expecting it to go up, yeah, you could have got in for 40 cents, and this thing went to 70 cents. You almost doubled your money. And then at any other time today, that all that was left on that option was just to be a sell. And I'll got a phone call coming in. I'll take it later. So that market would have dropped. That option wouldn't have made any money at any time on going on the long side. This is the call. So I hope I covered both sides. I hope I kind of showed you something that's happening there with options here on these expiring options. There was a time where you could have, I don't think I ever saw, it was like 250% was the most that you could have made on these options today buying them. But on the sell side, yeah, you only collected so much money, and you have been able to, on these decaying assets, to close them for less. So that's all I really want to leave you with. Again, my trade that I have on is actually on QQQ. It's not doing anything except losing money now. It's a decaying asset. I only did one contract. And since now it's almost a dime down, I only want to lose $10 or less. It's time for me to close that position. So normally I would say replace order, change it to a market order, and just send it. And it's closed for 24 cents. We got in at 30 cents, so we only left $7 on that trade minus commission plus $2 in commission, and a dollar in, dollar out. So we only end up losing $9 on that trade. And that's when we like to keep it. Keep those losses small. When you call direction wrong or you're trading the wrong instrument, learn to get out of those bad trades. Again, this is Solomon from Right Side Trading, where you can learn to trade with confidence, where you can learn to trade on the right side with confidence. Talk to you later. Bye.